You ever see a stock explode and think, man, I wish I knew about that just a little bit sooner? I'm going to give you that moment right now. For those who have watched my channel, every time I've called this stock, which is a whopping 6 times, it has produced a killer return in a very short period of time. I have extreme confidence, and that's why I'm going to reintroduce it today. Perhaps for the new viewers, it'll be the first time. And I know this might be the strongest setup yet. Now, to first show the proof, February 18th, my first introduction. April 8th, May 2nd, May 5th, May 22nd, May 25th. Now, I don't know if you guys have good memory or not. Hopefully you do. But February 18th, 16%, 2 days. April 8th, 86% in 11 trading days. May 2nd, 13% in 2 trading days. May 5th, 18% in a single trading day. May 22nd, 38% in 5 trading days. And May 25th, nearly 30% in 4 trading days. Now that's the proof. This company's Hydrate, I'm announcing it for the 7th time. Emotionally, sentiment-wise, event-wise, fundamentally, long-term, short-term, this stock has everything. I've called this stock the next HIMS. And I know when people hear that, everybody's heard of the next one. And everybody wants to find the true next NVIDIA, the next Apple. How many times do they find it? Not a lot. The fact of the matter is most of the companies you're trying to find a next one on are 0 to 1 companies. They're the pioneer for the most part. I call this the next HIMS because it's in a similar space and it has similar potential that a young HIMS had. But by no means is this the next HIMS in the sense of it being a copycat. This is a 0 to 1 company. This is a company that has a monopoly on the new infrastructure, and I'll get into that later. So, why do I first introduce this? I want to introduce it today on a short-term basis first. They're attending 2 conferences. In these conferences, in addition to some speech, they're doing meetups with high net worth people, one-on-ones with institutions. What does that mean? You can front run Wall Street. Front running Wall Street always works. Why I was able to give 6 pretty successful calls is largely because I was just front running events and I was just telling my viewers. It's pretty simple to know that if somebody's about to invest after you in big size, it's a good choice to invest before them. I don't know. There's not much other to say other than that they speak and the price goes up. If you want to backtest it, go ahead. This is not the same as a mega cap like Apple or Amazon where Tim Cook, for example, might come out and say something. It's not going to mean anything. You might get a % or 2 if it's a really great announcement. This is pretty illiquid. I won't lie. It's a micro cap. So you have that advantage in terms of inefficiency. With that being said, all it takes is one institution, one new analyst to get the price going. My recent call that yielded a really good return was very simple. It got its first independent analyst with a price target at that moment that was 4 times its current price. And how did the stock react? It ran. And all you had to do was pay attention when you saw that news. That simple. Isn't that crazy? It's just that simple. Now, I introduced this earlier. Short term, long term. I showed this sheet. Not super updated. It's probably a better situation now, although not at the same price. But essentially, the new business is going to do crazy numbers. I've listed my bear case, my base case, and my bull case based on only VSDH1. They had a massive partnership in which I made another video with Dr. Frank. If you guys are unfamiliar, this is a UK doctor with a weight loss method that wants to sell in the US. They're using Hydrate's technology. Using only this Dr. Frank, you can look at these really modest PEs. Depending on how you want to look at it, that's up to you. But no matter what, it looks relatively cheap compared to what will be insane growth. Now, most of this is just napkin math. But the fact of the matter is when you're looking to be early, sometimes that's all you can look at. This is their goals. I show you this for a good reason. 1.3 million orders by the end of 2025. Hypergrowth. It's going to be much better. Next year, they're looking for a 400,000 per month order run rate by the end of the year. They have businesses that are on their platform with 150,000 orders per month. Remember this number. Hims, 586 million revenue. 586 million revenue, 150 average order value, which they've disclosed, and 3 months in a quarter. They're doing about 1.3 million orders. If we look at Hydrate's market cap, 85 million. Hims, 11.73 billion. Now, these aren't even the same currencies, but for simplicity's sake, pretend they are. Okay, so we know Hims is way bigger. It's 150 times bigger than Hydrate. But look at that order number. 1.3 million orders per month from Hims versus 150,000 on just one single business on Hydrate. So you're looking at 150 times the price, 150 times the market cap, but only 8.6 times the orders of one business. Now, for you guys that are unfamiliar, what is Hydrate? It's like Shopify. You're powering another company to use your infrastructure and go direct to consumer. This is why I'm calling it a 0-to-1 company. It's the first to do this kind of thing for healthcare. Unlike Shopify, where there's no true moat, and you can have copycats like Wix or whatever to make your website, you can't easily copy Hydrate. Why? Because there's so much legal, regulatory compliance things. Hydrate has over 30 businesses under it, operating like Hims. And a single one of its businesses, albeit definitely probably the most successful one, is doing over 150,000 orders per month. Think about what 30 are doing and compare that. Now, a lot of you guys and a lot of skeptics are going to look at the revenue and say, I don't see anything. I don't see anything. The fact of the matter is you need to look forward in a forward-looking market. Now, this should be obvious, but there's a lot of people that for some strange reason, they can only see backwards. I don't know if you're just a hindsight person, but assuming you're not, this is a pretty no-brainer. Now, even if you were to for some reason look only backward, and you look at Hims' price to sales ratio and Hydrate's, you'd actually find that Hydrate is cheaper on a price to sales ratio basis. And now this is not the best metric by any means. Perhaps it's one of the worst. But even looking back, it's not that bad. Now Hims was a few dollars, about $3.50 or something, a few years ago. Right now, Hydrate's at $2. To just think this can't be a 10 or 20 bagger when it has a 0-to-1 business model is probably incorrect. I do think there's a very high chance that it can be a 10, maybe 20 bagger. Now, even if you don't believe that, I've already shown you there's good reasons to be in it, even if it's just for short term. Maybe you're just trying to make a quick buck. But I do believe at the end of the day, Hydrate is solving a very real problem and it's ready for explosive growth. And I want to say something. When Hims was trading at $3, it was burning cash like no other. Burning cash so fast, it's like donating it. Hydrate is in a position that people might think, oh, it's kind of like Hims. But it's actually much more farther than Hims was at that time. Because while Hims was burning all that cash, Hydrate is already near its inflection point and it's basically at break even. So you're not worried about this cash bleed. At $3, people might have looked forward and said there's a chance Hims goes bankrupt if it doesn't turn itself around. The fact of the matter is Hydrate doesn't even need this explosive growth. They don't even need that. They don't even need to do some sort of turnaround. They're already on the right track very, very clearly, and they're already at that near break-even, not burning cash point. In fact, their most recent quarter was actually profitable. So I say they're near break-even because typically people talk about profitable or not on a full year basis. But essentially the business model is near foolproof. Now, there are some cons, and I'm not going to lie. I think most of them lie with their parent company. People who've seen my videos have heard me talk about that. But the fact of the matter is when I first laid my eyes on this company, it was a little bit strange, it was a little bit sketchy, and there were red flags. But as news and information kept getting revealed, the story looked better and better, and it kept improving. Now, as you guys have seen and as I've shown, the price is higher than when I first introduced it. And that's for good reason. Things look better. Red flags are slowly disappearing. The fact of the matter is you can wait for everything to be rosy, everything to be clear. But if you've waited for that point, how are you going to achieve any upside? You think the market's not going to price that in? If you really want to get an advantage, there's no completely risk-free way. You do need to take some sort of chance. So that being said, I want to end this video and just pose a question to you. Would you rather be early or be late?